Welcome back everyone, Jake here. In this video, we're going to do a portfolio update for my Schwab account, and I'm going to be converting my stock positions in Google and Amazon into debit spreads. When we check in with the market, currently all of the indexes are green. However, I'm filming this in the morning. By the time you watch this, they might have turned red. The exact same thing happened yesterday. But I'm going to show you the technicals and the charts why right now I think is a good time to buy the dip. And first we'll check in with my Schwab accounts, and it actually reached a high of 64,000 back on March 29th. And remember, I started this year with 60,000. So it's slid back down, and I'll be honest, last week I was out of town. I had kind of a family emergency and I flew back to Milwaukee, and I chose just not to pay attention to my Schwab accounts, and that was probably a mistake because I could have sold calls against some of my positions in order to save money or make money, however you want to look at it. But it doesn't matter because I was anticipating this pullback that we're currently experiencing. That's why if you saw my update videos from 2 weeks ago or 3 weeks ago, I only bought the stock in Amazon and Google. I didn't buy options contracts. And sure enough, I said, well, they could either go to all-time new highs in anticipation for the stock splits this summer, or they could slide back and create a new local low. And this happened for both of them. Amazon is down 6% from where I bought it. Google is down 8.75%. But combined between these two positions, I'm only down $800. And this actually makes me excited because I can now sell these shares, 2 of each, in order to free up that capital and buy debit spreads. That's what I want to do in this video. But first, let's look at the chart for the S&P 500. And this opportunity this week, guys, is what basically I've been waiting for 4 or 5 months. Once we had this dramatic downtrend that started in December and lasted until March, I basically just had to watch it. If the market is falling, if a stock is falling, creating new lower lows, just ignore it, bide your time, hold your chips, whatever you want to say. And when the S&P shot up huge after the first federal interest rate hike, I knew at some point there was going to be a pullback. And as long as that pullback stayed above the new lowest low, then this is normal. This is just what the market does, guys. When you go back to the uptrend we experienced going back to COVID, 2 years ago now, the market just does this. It pulls back, goes up, pulls back, goes up, pulls back, goes up. And many of these dips occur on the third Friday of the month. The reason why is because the third Friday of the month has the most options contracts traded that month. Now, this week is a little weird because it's Easter this Sunday and Good Friday, so we don't have a third Friday. It's the third Thursday of the month. But when you look at the stochastics for the market, we're currently in the oversold range. The percent K line is at 8, which is pretty low. So according to all the technical indicators, this is the anticipated dip that technical traders were looking for, waiting for. And this is why I want to convert those stock positions in Amazon and Google into debit spreads. So let's go to the specific charts now for Amazon. And I was hoping there was a level of support for Amazon here at 3,200, but there wasn't, and it sold off. Looks like there's a green candle today. But I'm looking to open a debit spread because it's cheaper than buying a call contract outright. I think a call contract on Amazon at this share price would be like $30,000. So I want to open, buy to open a call at 3,100 and then sell to open a call against it at 3,200. So buy to open at 3,100, sell to open at 3,200, and that should cost me around $5,000 or $6,000 with a max gain of about $5,000 or $6,000. And I'm going to be going with expiration dates in September, not farther out because I want to reduce the cost and increase my gains should Amazon rebound. Now, if Amazon falls, that's not good for my debit spread, but I'm feeling pretty confident that Amazon will get back above 3,200 at least. It might not beat the previous high here at 34, but it might gas out here at 33 or at least 32. Now, I actually need to warn you guys about its earnings season, and all the mega caps are going to be reporting in the next 2 weeks. So Amazon does have an earnings report on the 28th of April. So if I'm opening this debit spread today, I want to get out of it before earnings and convert the debit spread back into 2 shares of Amazon stock. So let me show you what the stochastics for Amazon looks right now. So here we are with the stochastics indicating that we're in the oversold range. The percent K got as low as 2, so Amazon was sold off heavily, but we didn't create a new lower low. It didn't go back to 2,750. That's actually a bullish signal that this is a new uptrend. The percent K just crossed above the percent D, so I'm expecting technical traders to start buying back into Amazon, and hopefully it can get back above its previous high. But opening a debit spread, I don't really care. I'm just trying to capture price movements within this specific range. Okay, that was Amazon. Let's now look at the chart for Google, and more or less it's the same thing. If you've seen my previous videos, you know that Google is currently locked within this range between a level of support at 2,500 and a level of resistance at 3,000. I do think that before September, Google's stock chart will break through this 3,000 line of resistance, probably after the stock split occurs. But if you guys can capture price movement when it's at the bottom of this range, that's, this is just printing money basically. I shouldn't say that on my channel, but when I see Google pull back like this to this line of support, this actually makes me pretty excited, more so than Amazon. So I'm looking to buy to open a call at 2,600 and then sell to open a call against it at 2,700. $100 price range, and Google just basically needs to get back to here in order for me to close this debit spread, take profit, convert it back into 2 shares of stock. And you'll notice that Google's earnings is coming up on April 26th, and I don't really want to hold the debit spread. Well, maybe I will. I'm not quite sure if I will convert it back into 2 shares of stock. I'll look at the technical indicators right before earnings to see if I want to hold a debit spread through earnings. But I am feeling pretty confident that this level of 2,500 for Google will hold. Okay, we're back in my account, and the first thing I have to do is sell these 2 shares of Amazon and sell these 2 shares of Google in order to free up cash. I've now sold the stock, and I'm sitting on $23,000 in cash. Let's now go to the option chain for Amazon and set up the first trade. And for Amazon, I said that I was going to be opening a debit spread between the strikes of 3,100 and 3,200. And for expiration date, I'm going with September 16th. This is in 156 days. I do realize that if I did a debit spread for next month, it would cost way less and I would make way more if I was correct. But in this count, guys, once again, it's about risk management. You got to choose what expiration dates you're comfortable with. If something terrible happens, I want to give myself time for this option play potentially to recover rather than just lose everything basically in a week or lose everything in a month. So for the strike of 3,100, we are buying to open. The strike of 3,200, we are selling to open against it. This gives us a debit that I'm paying today of $4,985. Let's go ahead and execute this trade. For fun, we can scroll down and look at the trade and probability calculator on Schwab. And because this debit spread on Amazon is costing me $5,015, if it fills on a market order of this cost, it'll probably fill for less than $5,000. But my max profit is the width of the strikes, $100, multiplied by 100 shares per contract, and then you subtract how much you're paying in premium for the net debit spread. If you want to check out my videos on debit spread to learn more, it'll catch you up if you're not following what I'm talking about. But the point is that if Amazon finishes by September 16th above the share price of 3,200, my max profit on this debit spread would be 4,985. Now, I never hold an option contract until expiration, so if I blow past 3,200, I'll look at the technicals to decide when to sell. But I think I could make probably around 60% of this premium or this max profit, so maybe $2,000 or $3,000 if I'm right on this trade and Amazon does recover over the next couple weeks. So let's go ahead and execute. Let's go back to the option chain, and we're going to be doing the exact same thing for Google. Expiration date September 16th. We're going to buy to open at a strike of 2,600, sell to open at 2,700, a width of $100 in share price movements. And the closer one is the one you buy to open for a debit spread. The farther one is the one you sell to open. So the debit it's saying right here is 5,130. Let's go to the trade window. Now with Google, I'm actually feeling more confident than I am with Amazon with this level of support at 2,500 holding. Once again, we've got earnings coming up on the 26th. Ideally, I can capture this profit before then, and Google will trade up in anticipation of earnings. But even if earnings come out, I'm feeling still pretty confident that Google's not going to plummet to, $2,000 a share. For fun, trading probability 4,890. Once again, I would never hold this until September, unless, once again, I was way down on the position and I was just hoping it would come back. But I'm actually going to open 2 of these debit spreads for a cost of $10,000. So this is going to be a very large position in my accounts, but once again, I'm just probably twice as confident about my debit spread making me profit on Google than I am on Amazon. So let's go ahead and execute this and then check it out in my account. Back to my account page, and you can see the debit spreads are now there and they're doing their thing. What we need to see is basically the entire market to bounce back and recover. It doesn't have to even get back to 4,600, I think, for these debit spreads to pay off huge for me. But I'm excited to, once again, develop this plan weeks ago of buying the shares and then converting them to debit spreads should the market pull back. I thought it might. It ended up doing it. We're now in phase 2 of this plan. Wait for the markets to go back up and then take profit on these debit spreads. And I'll probably just convert them back into the 2 shares of both Google and the 2 shares of Amazon. Okay guys, that's all for this update video. If you found it informative, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.